It's doing very well this year, the asset class. It's up nearly 10% on the, if we look at one of the major indices, the Dow Jones UBS Commodity Index. And the nice thing about it is that as from the beginning of last year onwards, really, we've seen a clear resurgence of commodities to tracking their fundamentals as distinct from the macro environment that dominated price action pretty much since the crisis back in '08. So this year you've had an amazing mix of situations across the asset class, from coffee, as you said. Coffee's up over 70%. Lean hogs is up around 20% last month. You've had soybean meal up around 11%. You've had sugar up 12%. So some fantastic return profiles. And of course, you know, with what we've seen in the Ukraine recently, you know, the asset class is also behaving as a little bit of a geopolitical hedge, which of course is very important, and one of the core reasons why people go into it in the beginning. You expect commodities to respond to things like weather and these.
Is that strength going to last then? Are we seeing the pickup of the cycle?
Well, I think for this year, I mean, certainly if we look at, if we break it out between the various sectors, our view is that the industrial metal sector, which has been heavily depressed recently, and this year it's got off to a pretty slow start.
Well, it depends on, you know, global growth and what we're seeing in China. Are you optimistic? We're going to be getting growth targets out of the annual NPC meeting this week. Are you confident that they're going to achieve a higher level of growth? I mean, it's all high, but the slowdown would hit the industrial metals.
The slowdown would hit the industrial metals, definitely. We're slightly below consensus on Chinese growth. We see it around 6.9% this year. I think what we'll see this week is perhaps a shift from the policy of targeting a specific GDP growth number and maybe expanding that to accommodate a range in some capacity, perhaps 7 to 7.5. But that said, you know, China is obviously very important for industrial metals. Much of its slowdown has already been priced into the market at this stage. And if we look across the complex, copper being the big exception here, many of these metals are at or below their cost of production. And with the prospect of a global economic recovery, the key driver of commodity prices and a very important driver specifically of industrial metals, we expect to see that sector within the asset